everybody. Welcome back to the Blockware Intelligence Podcast. This week I have on Greg Foss. Greg, welcome to the podcast.
It's a pleasure to be here. Thanks for having me, Joe.
Of course. So you always say, do the math. Greg, what exactly is the math?
You know, in this great Bitcoin community, I've come to meet some people that can lay things out quite succinctly. And I've always been talking about the math of the DEBT spiral, the reality of the U.S. situation, which is reflected in most other developed G7 countries. And I have a good friend, James Lavish, who I actually suggested, I'm not going to steal any of his thunder. I said, James, here's a thread I put on Twitter, but why don't you release a report that he does on a weekly basis on a Substack on the numbers of the U.S., the reality of the U.S. debt spiral? Because the mathematics is as simply as this. The USA right now at historic low interest rates is barely collecting enough U.S. tax revenues to cover its interest expense 100%, which means if interest rates rise, which they are likely to rise since the Fed is pushing short-term interest rates higher, the average funding rate for the USA is going to increase, and that will lead to higher interest expense, which will in turn lead to the organic growth of the U.S. debt outstanding just because of interest. And so James Lavish put out a real good, synopsis of this. And I'm just going to borrow. I had the same numbers, but we'll borrow from this from James's report. The USA collects $4 and change trillion annually in tax revenues. And mind you, that has been augmented lately because of nice capital gains increases in stocks and assets. They collect four trillion, and they have what's called they have their primary, they have a fixed cost base that includes entitlements and military spending. And the combination of entitlements and military spending is in the area of 3.6 trillion, which leaves the balance of the tax revenues to pay for the interest expense. Now, the USA has $30 trillion of outstanding debt, Joe. And right now, their average interest expense is about $400 billion annually, okay? But that's at historic lows. The average interest rate that they were paying, if you do 30 trillion divided by 400 billion, is around 1%. But that's likely to rise to 3%, right? Because the Fed funds rate is, U.S. 10-year rates are now, 10-year Treasury yield rates are now 3%. And the shape of the yield curve and the funding, the blended funding costs is going to cause interest expense to increase, so that they will not even cover their interest obligations, expense obligations, with the residual tax revenues over entitlements and military spending. So it basically means that debt spiral is growing organically and can be quite severe if the Fed has to push rates significantly higher just because they are fighting inflation. It all leads to, my opinion, that quantitative easing, QE infinity, is in the offing. There's no other way to solve the debt spiral. And I want to throw this out. It's important because there's other people doing great research. So I mentioned James Lavish, Luke Groman, absolutely on the same page. What a lot of people fail to appreciate, Joe, and this, I spent my entire life trading credit, junk credit to be exact. If a corporation had the same financials as the USA, it would be rated CCC. Full stop. Full junk credit, CCC rated. That's pretty scary, isn't it? Because CCC rated corporations do not cover their interest expense, or cover their interest expense anywhere between 1 and 1.5 times. That's the USA right there. And it's soon to be covering it less than 1 full turn. This is not a good situation. It's very scary. The rating agencies give the benefit of the doubt and say, okay, well, these guys do have the ability to tax and they do have the ability to print money. But nonetheless, it's my opinion that the credit risk of sovereign nations is severely under, as we know, in my opinion, is Bitcoin. Bitcoin can be thought of as an insurance on misunderstood, and we need a solution. The solution is sovereign debt spirals. It's not a pretty picture. I just saw some math on Canada, my home country, in total debt to their GDP. So this is a global phenomenon today that put Canada in the bottom of, well, in the they were the top performer of the zombie nations in terms of adding. It's extremely dangerous because once confidence is lost in the sovereign debt of a nation, it quickly cascades right through the markets, right into corporate lending, into structured products, into the commercial banks, and that's the beginning of the end, essentially. And I'm not predicting this is happening imminently, but it will absolutely happen over time. Hence the expression, it's only math.
Yeah, definitely. I think, that makes a lot of sense. I saw a tweet from Luke Roman the other day, speaking of him. He basically mentioned that the idea of the Fed will likely pivot
I guess
by the end of September.
It's very important to define.
Do you have like
pivot,
a deadline or an idea of when you think the Fed will pivot, or are you a little more uncertain?
So I need to start by defining what I think would be a pivot. And for a while, they were talking about Fed funds reaching 4.5%. Right now, as you know, it's 2.5%. So essentially that would require another 200 basis points or 2% increases in the Fed funds rate over the next meetings. And I don't believe they will get to that rate. So I believe they're already walking back expectations to get to that rate. I believe that in concert with a reduced inflation target. Not reduced inflation target, an increased inflation target. So moving from a 2% annualized inflation to, let's say, 4 or 5% annualized inflation will allow them to seek cover and say, okay, mission accomplished, inflation's under control, and then quietly say, yeah, it's no longer 2% annualized, we're aiming for 4% annualized. So again, got to be careful. How do you define pivot? I think I know how Luke is defining it, and it's aggressive. To say that the Fed will pivot by September, I believe is aggressive. That being said, if we define pivot as a change of the inflation target, if we define pivot as saying, okay, we're not going to get to 4.5%, we'll probably get to 3.5%, maybe 4%. Yeah, I think we're in the process of that. I think if you dissect the some of the language from some of the governors, it's pointing to that. And in fact, yesterday, I'm not a huge fan of watching CNBC anymore, but I used to watch it religiously as a trader on Wall Street. And I sometimes tune into it again. And there happened to be a guy on TV yesterday saying exactly that same thing. Now, he was an equity guy. And I tend to, give less credence to the equity analyst than the credit analyst. That's just my bias. But still, the message is getting out there. There was a Chicago white paper that was introduced at Jackson Hole just recently, the Jackson Hole summit. And it basically said the Fed has a choice. Accept inflation or global depression, one or the other. And so Luke is in that category. I believe in that outcome as well. And if you look historically, the Fed has always succumbed to a taper tantrum. There's an old trading adage, 3 hikes and a stumble. And we're experiencing the stumble right now. Global risk assets are balancing on the head of a pin. And if you lose confidence in the markets, you'll argue that the Fed has, they have 2 distinct mandates. One is full employment and the other one is control inflation. Now, that in itself are 2, those things are somewhat working at odds. But the third one is financial stability. If the U.S. Treasury market starts to seize up because bid-offer spreads widen and confidence in the U.S. Treasury as a quote-unquote reserve asset starts to wane, I think, I think you'll see the Fed have to to understand the pure math of it. Yes, we will have to accept inflation. Yes, it's going to be a reality going forward. There was actually a Wall Street Journal article saying that, and Wall Street Journal tends to be the leaky, that's how the Fed leaks out their case. So many things to me point to the pivot is in progress. That being said, I have never met a group of, poor poker players in my whole life that probably are getting their back up a little and like, oh, they think I'm bluffing, eh? They think I'm bluffing. Well, I'm going to show them I'm not bluffing. And now all of a sudden, emerging markets continue to crater because of the strong U.S. dollar. And it's circular and it's very dangerous, Joe. It's Luke Roman's an amazing analyst. I like his work. That being said, we are dealing with, there's math, and then we're dealing with illogical human beings who perhaps should not be in a risk chair. I mean, that's my biggest beef with Federal Reserve Powell, Chairman. He has never sat in a risk chair. Like, he's never done this. He's never seen what happens when markets unravel. The Fed is painted into a corner when confidence is gone. And, you can talk a big game, and then you talk yourself into a corner. I personally believe. How long, though? And are they the stubborn child? I don't know. And this is why it's dangerous.
Absolutely. Since you're up in Canada, I want to ask you about something that happened a little while back, but it hasn't been touched on recently. The Canadian truckers. I think the freezing of the Canadian trucker bank accounts was kind of like a great opportunity for massive growth in Bitcoin adoption in Canada. And with you up there, did you see that actually happen, or was it kind of underwhelming?
Well, okay, so to be clear, I'm lucky to be in the fine state of Maine right now, so New England. But yes, I am Canadian. I believe it was let's call it a seminal event in the life of Canada, as well as the Bitcoin adoption process. Now, if you had asked me, and I played this game, I didn't play this game, but I've stated it in other podcasts. If you had asked me 3 years ago, what is the chance that the Canadian government would freeze bank accounts? I would have said, yeah, okay, it's not impossible, but we're still a fairly free country. I'm going to say, and by the way, freeze bank accounts over a period of the next 20 years. So starting 3 years ago. Over that 20-year period, would have been the chance that Canadian government would freeze bank accounts. I would have said, okay, yeah, not zero, yeah, 20% over a 20-year period, but not high. And yet 3 years later, with 100% certainty, they froze bank accounts. And it was very scary because I knew people who got their bank accounts frozen. I was named in a few newspapers along with Jeff Booth as being supporters of the Canadian truckers convoy. We had, in fact, endorsed the fundraise using the Tally coin, and it became a little scary because when you have your assets tied up, your net worth tied up in the Canadian financial institutions, and you're worried that they are going to freeze it, it sends up a flag. And while we saw some accounts get frozen, and now there have been repercussions and some mea culpas, but the truth is it happened. And yes, it did get some press. The Bitcoin angle got some press, but true to form, the Canadian press, made it look like Bitcoin was the bad guy. Oh my gosh, Bitcoin is allowing these truckers to get funded. And I want to stress, Joe, that I wasn't anti-vax per se. I'm just pro-freedom. I just want to see Canada remain a free country, citizens allowed to express their points of view peacefully. And yeah, there was a lot of adoption amongst certainly the truckers. Certainly it made headlines. It got people thinking. I'll tell you what, though, it probably got more press in the United States than it did in Canada, and rightly so. Because if it could happen in Canada, I don't want to predict it will happen in the U.S., but it certainly increases the odds that it could happen in the United States as well.
Yeah, scary times, and thankfully, Bitcoin exists as this freedom technology that can, empower individuals and not necessarily put power into the hands of a small select group of people.
That's the breed. Bitcoin is freedom money, and Bitcoin is freedom. I absolutely agree with that. Now, that being said, we are a community that is up against some established, deep-pocketed, and some would call nefarious counterparts across the world. I believe in the long run, Bitcoin will win, but I also have to be cognizant of the fact that there are people who will do everything that they can to stifle the progress of Bitcoin, including probably the Prime Minister of Canada, who is, just made some comments recently about he's blaming everything on climate change, right? So he just recently blamed the rise in civil unrest in Canada on climate change. I mean, the narrative just becomes so, it seems like it's so scripted, but there's enough people that still get brainwashed by mainstream media. And the Canadian mainstream media was kowtowing to the political opposition to the truckers, and a lot of people believed it was fine to freeze bank accounts. So, pushing and pulling. Over long term, though, I believe it was an event that will show the advantage of Bitcoin. And if I could add one thing, my good friend Jeff Booth, who I already mentioned, he happened to be at the Oslo Freedom Forum, and there was a young lady from the Ukraine that came up to him and thanked him for being involved in the trucker convoy, because she said it warned them, essentially, or allowed them to start funding some war relief efforts through a Tallycoin platform rather than through GoFundMe. And that's, she said, we were able to get life-saving resources to the citizens without friction, without being blocked by the various funding platforms, etc. And you know what? She actually said, I believe it saved lives. She said that to Jeff Booth. I am paraphrasing a little bit, but there you go. The experience in Canada got translated to the Ukraine, and hopefully, in my opinion, I believe that it helped to save some lives. I do honestly believe that.
Yeah, that's awesome. Switching gears a little bit, what are your thoughts on the whole quote-unquote get on zero thesis, meaning hold $0 in all Bitcoin? I personally think it's fairly dumb and foolish. I think it puts you in a weak position on massive drawdowns, and it kind of forces someone else to be the buyer of last resort. What do you think?
Yeah, you know what? I guess that's the first time I've heard that expression, get on zero. I always thought it was a misnomer. I know what get off zero means, and that's how I like to manage risk with respect to Bitcoin. And I've made this fairly public. I firstly am not 100% exposed to Bitcoin, and shame on me, but that's never how I've managed risk. And then secondly, and most importantly, with the asymmetry of the return distribution of Bitcoin, meaning the asymmetric upside, you actually don't have to be all in order to participate in a generational wealth opportunity. And so I have never actually advocated being 100% in Bitcoin. That being said, I understand the conviction. But you know what? I own a basket of hard assets that includes Bitcoin as my highest weighting of the hard asset category. But I also own other hard assets, and that's just the way I've always managed risk. And gold, for example, is not Bitcoin's enemy. In fact, gold and Bitcoin are so closely joined at the hip in terms of why they exist to hedge against central bank shenanigans. I think that it's natural that gold bugs would gravitate to Bitcoin. They already understand the fiat Ponzi. Everybody who understands gold understands the fiat Ponzi. And gold is only $10 trillion. I mean, we need to focus on the bond guys, okay? The credit guys, the people that are funding the fiat Ponzi. And that is a $400 trillion pool of assets that should allocate a portion of that pool to Bitcoin. again, the world, not there are no asset managers in the world that are 100% exposed to any one asset class. There are individuals that are, and that's fine. That's their prerogative. But the big money will never be 100% exposed to any asset. I've always managed risk on that basis. I own equities. The only thing I own zero of is bonds. And given that I traded bonds for 35 years, this is the first time in my life I have zero exposure to bonds. And I guess that's what I'm trying to say. I'm on zero in the bond allocation. But if you own zero in Bitcoin, you're taking an extreme amount of risk. And then when the boys and ladies say, get on zero, meaning get on zero cash 100% to Bitcoin, I think you're going a little too far to the tail risk side because, yeah, markets are volatile. We are on the head of a pin, and the Wall Street algos are still trading Bitcoin as a risk asset, okay? They haven't made the, there haven't been enough senior people in the analysis team to say, hey, you know what? Bitcoin isn't a risk asset. It's actually insurance. It's the opposite of a risk asset. But until that narrative catches on, yeah, you have to play it like you see it. Don't trade the book you want. Trade the book you have. And right now, Bitcoin is being traded as a risk asset. Full stop. I think that'll change over time. But until it does, I need to keep powder dry, allocated to other assets. If you want to call out an asset, my choice is calling out bonds. Bonds are a fiat contract. Bonds are a fiat contract programmed to debase. That also is pure math. And bonds are what funds the fiat Ponzi. So, maybe we'll take that expression, get on zero bonds, okay? That should be for a lot of the population of the world. And you'll say, well, we always need to hold some bonds. I'll say, okay, well, at least get out of some of your bonds and allocate that portion to Bitcoin because the 60-40 portfolio is dead. 60% equities, 40% bonds. That 40% that's in bonds is mathematically programmed to debase, as well as bonds, as you know, perform very poorly in rising interest rate environments. So there's not a lot there for the bond guys, in my opinion. Now you'll get guys like Raoul Paul who are out there saying you gotta trade bonds. You gotta trade bonds. Well, so far, unfortunately, he's been wrong, and he announced he didn't announce he said a mea culpa. But please understand that bonds, the 10-year return on a bond over the next 10 years on the U.S. Treasury will be 3%. That's the math. If you buy it today at 3% yield, that's the yield you're going to get over the next 10 years. And you're going to say, well, no, I'm the world's greatest bond trader. I'm going to trade it when yields go from 3% down to 2%. Then I'm going to sell all my bonds. Well, if you look at historical results, that never works. The return on the bond index over a period of, over the term of maturity of the bond is exactly equal to the yield on the bonds, less trading commissions. You got to look at these results because that's what a bond is. It's not subjective at all. They either pay the coupon or they don't. And if they don't pay the coupon, you've made a horrible investment because you're getting 40 cents on the dollar back when you invested 100 cents. That's the average return. The average restructured price of bonds. So I just can't see it. I don't know how to make the math work. And there's just so many assets allocated to the bond silo. That's where I think the sweet spot is for anybody looking to diversify risk. You take it out of your bond portfolio, you put it in to Bitcoin and other hard assets. And equities, yeah, look, equities at least have upside because they are not contractual. Yeah, they'll fall down, but they also have cash flows that can grow. That is a subjective or a non-contractual return. So I love Bitcoiners. Don't get me wrong, Joe. And the guys are doing some great work. The young guys at your company and some of the other young guys out there. But what they got to understand is, and I'm not saying anybody is, in your chair or whatever is saying 100% Bitcoin, but there are a lot of influential guys that say it's Bitcoin or nothing. And well, I like their conviction, but the world risk is just not managed that way. It is just not, and it never will be managed that way at any large money institution.
Yeah, definitely. I mean, I fully agree that I think holding, 100% of your net worth in Bitcoin is foolish for sure. And I also agree that holding, any form of long duration bonds for a long time horizon is also extremely foolish.
Good.
What is your, you said you hold some equities too. I'm just curious, do you have a specific segment of equities that you really like right now? Like, are you just general like S&P 500 type guy, or do you have like
no. So,
okay.
Yeah, you bring up a good point, and here's one of my pet peeves, okay? People who own the S&P 500 as equity exposure also own Western Union. And I'm just going to pull out Western Union to pick on Western Union, okay? But plenty of ETFs also own Bed Bath & Beyond common stock. And when the common stock of a company is trading at inflated values, when the bond prices of the same company are trading at distressed levels, meaning 30 cents on the dollar, something is wrong. And it's usually the equity valuation. Yet if you own an ETF that owns Bed Bath & Beyond, you're part of the problem. Inefficient market pricing. But let's get back to Western Union. Western Union has a weighting in the S&P 500. I think Western Union's going the way of Blockbuster. But if you own if you own SPY, you own a piece of Western Union. A small portion of the index, but still greater than zero. So I own individual equities. I actively manage it. It's not a passive stake. What do I like right now? I actually like gold miners. That's an equity with a correlation to gold, another hard asset, trading at extremely cheap free cash flow multiples, like extremely cheap, meaning you get your money back in 3 years or less. These are assets that have been shed traditionally over time, and people have gravitated to the FANG stocks. You know that Apple and Tesla account for over 10% of the S&P, just those two stocks. Like, oh my God, right? Now, I like Elon Musk and everything, but let's be clear. I mean, Tesla definitely has a speculative element to it. Apple, everyone runs to it because it's so big, everyone has to own it. So there has to always be a bid to Apple stock. But, some of these valuations do not make sense to me. So I don't own them. I used to be short a lot of this stuff because I was a hedge fund manager. Now I don't typically mess around with in the short arena so much, just because I'm not 24/7 on I say 24/7, but when you trade risk, you generally are on 24/7. Even though the markets are closed, you're still thinking about your book. All of this leads to, there's segments of the equity market that I think are cheap. I am not bullish overall on equities. In fact, I reflect the viewpoints of a lot of the guys out there that are saying risk assets are overpriced and at risk of a major correction. I don't have confidence that, the powers that be see the world through the right lens. I don't think, if Powell truly understood the math of the debt spiral, the right thing for him to do would be to come out and admit it. But I suppose, he doesn't want to go down in history as the one that admitted that the USA is a horrible credit. That being said, it's the best crack house on a crack street, okay? The USA will be the last country to fail. But it doesn't make it a great credit. It's just the best crack house on a crack street, right?
Definitely. I'm curious from a long-term perspective, do you think Bitcoin will eventually become this unit of account and medium of exchange for a majority of the world, or will we always still be using some sort of like IOU type technology?
It's a great question. I firstly believe that Bitcoin will become the global reserve asset, not necessarily the global reserve medium of exchange. The reason is that I think U.S. Treasuries are on their way out, and that need to be replaced by a global reserve asset that's scarce, decentralized, hence Bitcoin. More importantly, I think there will be a day that Bitcoin is used to price global energy. I think the correlation between Bitcoin and energy prices is natural. I get in trouble with some physicists that say, when I say the Michael Saylor adage, "Oh, Bitcoin is digital energy," I think the physicists, the pure physicists, take it too seriously. But as a guy who's, firstly an engineer and secondly thinks of energy and money, store of value of money is a reflection of your work energy, the energy you put into accumulating a store of value. It makes sense to me that natural resource energy should be priced in a form of money that I view as having an energy component, okay? I think Putin feels the same way. Now, I'm not a fan of what Putin's doing, but I tell you, he's not a fan of having his bank accounts frozen when the U.S. Treasury restricted his access to, or the SWIFT system restricted his access to his U.S. Treasury reserves, right? So I think Bitcoin will become a global reserve asset, and that will be accelerated as the world moves to pricing oil and natural gas in Bitcoin rather than the US dollar. When that happens, it's possible Bitcoin claims a large portion of the total addressable market of global financial assets, is why I have a price target on Bitcoin that's, some people would say it's astronomically high relative to where it currently trades. And I say that's fine. It's just an expected value type of calculation. But yes, to be clear, reserve asset, Bitcoin. Global reserve currency, we still need fiat. We still need the ability to do international trade using, non-barter, using currency as the means of transaction. One half of the transaction, the other side is product, right? But you don't trade product for product. I always say, I don't want to go back to a world where you have to trade cows for chickens, right? What's the right exchange rate for cows versus chickens? And that's what the world benefits from currency. But currency is your checking account, and Bitcoin is your savings account.
Yep. I agree. Definitely, Bitcoin is your savings account. Once Bitcoin becomes this treasury reserve asset, do you envision the world to take on, or individuals or entities within the world to take on Bitcoin denominated debt, or do you think they'll still be using, you think generally they'll still be using some other form of fiat type currency that debt will be denominated in?
It's a process, right, Joe? You have, when you do a network transfer, let's say you're switching a operating system at work from iOS to, or MS-DOS to iOS, let's say. On a Sunday night, you don't just come in and turn off your MS-DOS network and hope that iOS is running bug-free the next day. You run the two networks in parallel for a while so that you're able to ensure that, there aren't any catastrophic bugs. I believe that's what's happening with Bitcoin right now, that it's a network that's being run in parallel. And that it's not formally, there's no huge central bank that's advocating that. I just think it's happening. But I think there will be a time where they realize the gig is up and that they will have to run a parallel network where you have a global reserve currency. Could be the US dollar, and it would be great if the USA embrace Bitcoin. I think Jason Lowry is out there with a very moving thesis on that front. But that being said, there will be two systems, a process where there is lending taking place in each. And over time, it'll probably gravitate more towards Bitcoin as being the collateral, the purest form of collateral that collateralizes fiat-based loans, potentially. But over time, I think there will be, and this is my hope, it's an orderly transformation. And during the orderly transformation, the USA maintains its global reserve currency status, and Bitcoin moves to the reserve asset status across the world. Savings account, checking account. How do you borrow? I think you'd be able to borrow in both. What is the pristine form of collateral, though? Bitcoin.
Yeah, I definitely agree that Bitcoin is this unique, great form of collateral, and it'll be it is and it will continue to be a great savings technology. How critical do you think it is for Bitcoin to be successful for individuals or entities to hold their own Bitcoin private keys, or do you think that's not necessarily that big of a deal?
I believe holding your keys is ultimately extremely important. That being said, there's a process to get people down that road too. Listen, my dad, who has passed away, but he went through his entire life. He never had a loan from a financial institution his entire life. I finally convinced him to get a credit card in his 70s, okay? And I guess all I will say is it's a process with generations. I mean, you know, my dad would never have been comfortable holding his own keys. He owned stocks, and therefore if he bought stocks that had exposure to Bitcoin, that's better than having no exposure to Bitcoin at all, because he's not comfortable holding his own keys, okay? So it really applies across generations. Now, that being said, young kids who grow up with an iPhone, who are so comfortable with an iPhone, they live with their iPhone, and they have their entire life on their iPhone, is it going to be comfortable for them to have their own keys? Yeah, but you see what I'm saying is, like, old guys like me, when I have a problem with my iPhone, I don't try and fix it. I give it to my kids. I say, hey, guys, can you help me out? I have no idea how this thing works. Can you just help me out? So for a guy like me, you know, I own Bitcoin ETFs. I'm also based in Canada, where ETFs, spot ETFs, are a reality. And you can put those spot ETFs into tax-advantaged investing funds. So you get a tax advantage in doing so. I know it's not the ideal solution from not your keys, not your Bitcoin. But that being said, there are financial incentives and ease of investment incentives that allow old, fat, white guys like me, and it doesn't have to be old and fat and white, but the truth is that's, you know, what I am, and that's where a lot of the net worth of the world lives, in people that are, you know, older and, you know, between their 50s and 70s. And those people aren't as comfortable with the technology side of it as the young kids. I hope that answers your question.
Yeah, I agree. It's you know, has been and will continue to be a process. I'm going to ask you a question that you probably don't normally get, but what is your long-term bear case for Bitcoin? Like, what could go wrong?
You know what goes wrong is that the price remains lower for longer, and people lose confidence in it as a transitory asset that becomes insurance, okay? Well, if it's insurance, and I believe it's insurance, how come the price isn't reflecting it, Foss? And I'll say, yeah, you know, markets can remain irrational longer than you can remain solvent. That was, I think, a Greenspan comment, but apply it to Bitcoin. There are a lot of people that don't want Bitcoin to succeed. Imagine if there's, this is the, you know, the theorist in me, you know, the not black swan theorist, but the, I'm drawing a blank on the word when you're out there and you're pressing, oh, you know, the government's always against you.
Like
the
a
government's
conspiracy
always...
theorist?
Conspiracy a little bit. Let's call it conspiracy theory. The conspiracy theorist in me is, what if the government is shorting cash-settled Bitcoin futures to suppress the price, and then printing money to cover any losses in that trade? Is that a possibility? Yeah, 100% it's a possibility. Are they doing it? I don't think they are, but it's not out of the realm of possibilities that it could happen. And so then you get the confidence of the Bitcoin community over time. We're humans, and if we don't see, you know, and I'm not talking everybody, because there's a lot of the Bitcoin community that say 1 Bitcoin equals 1 Bitcoin, but the truth is there's a lot of others that need to see financial performance of Bitcoin because they have a lot of their savings in it. Well, if they start losing confidence because the price doesn't result in number go up, right? Number go up technology is there, but number go up is open for manipulation and all these other things. I see that as a distinct bear case where people just give up hope. Now, the horrible thing is, if you give up hope in Bitcoin, and Bitcoin was your hope because we realize how screwed up the fiat Ponzi is, that becomes self-fulfilling, right? Then you get all these dejected people in society, and that feeds the doom loop. So, Joe, I really hope it doesn't happen. I will tell you that having lived in risk assets my whole life, Risk happens fast, and the solution always takes a long time to filter out through the process. So there'll be ups and downs. I really wish that people would understand that Bitcoin is still only 13 years old. I don't want to fast forward 13 years in my own life because, you know, I'm fairly old as it is. I don't want my life to fast forward, but let's give it another 13 years and see where it really is. It is my belief that it is the only solution to the fiat Ponzi, but there's plenty of fiat people that want their fiat Ponzi to continue and would be incented to try and, you know, let's say suppress the price of Bitcoin over time so that the followers lose their conviction.
Yeah. One last question on, I guess, a more positive note. Why are you personally so active in the Bitcoin community? Like, why do you talk publicly about it?
Well, you know, thank you for that question. You know, I'm active because I care. I guess I just have to say this. Look, I was a active participant in the fiat Ponzi for 30-ish years. Okay, I got paid as a investment dealer trader when I was on what's called the sell side of the street. Then I moved to the buy side of the street, being a client of the street, and that's where I worked at 2 different hedge funds. And I'm not going to lie. I mean, I was well paid to sit in those chairs. Now, they're actually horrible chairs to sit in because your life revolves around every position that you're sitting in that chair holding. I often say, you know, there were times I went to a movie on the weekend with my wife and I didn't even listen to the movie. I was just thinking about some stupid position I had in my trading book and it was ruining my life. But nonetheless, you get well paid for it. I knew the fiat Ponzi existed. I didn't know the solution. I was not sold on gold. That being said, when I first was introduced to Bitcoin, I thought it was a Ponzi itself. It had to be because that's what the press was telling me. But I did research. And when I did the research, I realized how beautiful a solution it was. And I think what I have is experience that'll allow people to accept, hey, he thought it was a Ponzi at the beginning too until he actually did research. And I'm trying to promote the research angle to it, firstly. And then secondly, and this is really more important, I got 3 kids, Joe. And I feel like an absolute schmuck that I'm pulling forward gains at the expense of my children because our generation is too soft to pay our own debts, to face down the problems that we have created. So I'm out there trying to promote a solution that I believe is win-win. I don't want the USA to fail. A lot of people will say Foss is out there saying the USA is in a debt spiral. It is. It's not because of me. I'm just pointing it out, and we need to tell the truth. Why? For our kids. I've lived it. I've sat in a risk chair. You didn't learn this in school. They don't teach you this in school because if they did, nobody would invest in the system because they'd realize, oh my God, this system is a Ponzi. So USA survives. I want the USA to survive because it is the last bastion of freedom. Canada, good friend of the USA, but boy, are we moving in the wrong direction on certain fronts. So I'm out there trying to promote the only solution I see to freedom, to all the principles that America was built on, and hopefully secure a better future for my children than the world I got brought into. And unfortunately, right now, I'm leaving the world in a lot worse spot than when I first came into the world.
Yeah, well, you know, thank you for all of the work that you've done, you know, for the Bitcoin community. I'm sure many other people think the same. We'll go ahead and wrap this up. Is there anywhere that you want listeners to go after this? Do you have, you know, I know you have Twitter, but do you have anything else?
You know, I'm really keen on a platform that I'm involved in called Looking Glass Education. Okay, so lookingglasseducation.com is a nonprofit platform for free education around the world, teaching the truth about finance, teaching the truth about the current system, and teaching the solution, which is Bitcoin. It's been translated into 18 different languages already. It's being embraced by South American countries considering bringing it into their school curriculum. So I'm really proud of that. So that's lookingglasseducation.com. The Twitter handle for that is lookingglassedu. So at lookingglassedu. And you know why I'm proud of that is because it's being run by young kids like yourself, Joe. I really love the work that Will Clement does. I love the work. And by the way, like, how old is he again? Like, you know, less than half my age. Like, can you believe that he knows everything he knows and has done the research, and he's half of my age? I didn't know the stuff he knew until I was, you know, 45 years old, let alone 21 or however old he is, right? So keep doing what you guys are doing. I will do what I can to lend my experience to the equation. I believe that my experience is somewhat unique. There's not that many people that could have worked at a bank in 1988 and realized it was insolvent. And then also, I'll tell you, that was Canada's largest bank. Oh my God. Canada's largest bank was actually on its way to bankruptcy in 1988. And it was no different than all the banks on Wall Street. So these successive financial crises that I've lived through give me a perspective that anyone who's half my age couldn't possibly have lived through because they weren't alive, okay? Like, they weren't 25 years old in 1988. That's how old I was. So hats off to you guys. Hats off to the young guys at Looking Glass Education. Hats off to Blockware, the work that they're doing. Together, we're, you know, rowing in the same direction. I believe that we have the right side of the fight. We are honorable. This Bitcoin community is amazing. But there will be challenges, and education is the key. So circling this all back, just tell the truth. I try and tell the truth all the time. It does offend a lot of people, and I'm sorry for that. But if the truth hurts, you've been living in a bubble for too long. Let's get on board. Learn mathematics for the kids. That means Bitcoin.
Awesome. Thanks for coming on the podcast, Greg. We'll definitely have to do it again at some point.
I really appreciate your invite. I look forward to crossing paths in person. Keep up the great work, and honestly, your questions were awesome. Okay, and this was not rehearsed. These were awesome questions that were not scripted or anything like that. So obviously, there's a lot of thought that goes into this, and I appreciate being your guest. Thank you so much.
Absolutely. Thanks, everybody.